Welcome back. Let's jump into that listener question. It really gets to the heart of what we're exploring today.
It does. The question is, I'm on board with starting small, but how do I actually make it happen? Between bills and daily expenses, it feels like there's nothing left over to invest.
It's a common challenge, but there are definitely ways to make it work. Remember that pay yourself first principle we talked about from mymoney.gov. Instead of waiting to see what's left over at the end of the month, make saving a priority right from the start.
Okay, so even before I think about, buying those non-essentials, I'm setting aside a specific amount for savings.
Exactly. And automation is key here. Set up automatic transfers from your checking account to your saving or investment accounts right after payday.
Ooh, that's a good idea. So it's almost like the money disappears into those accounts before I even have a chance to miss it.
Exactly. You're basically making saving a non-negotiable part of your routine. It's built right in.
I love that. It definitely takes the guesswork out of it. And speaking of taking stock, the SEC guide mentioned that net worth statement exercise. It's like a financial snapshot, right?
Exactly. Listing your assets, everything you own, and your liabilities, everything you owe, gives you a really clear picture of where you stand financially.
Hmm.
And once you know where you are, you can start looking for areas where you might be able to, free up some extra cash.
It's like decluttering your finances, just like you might declutter your closet or something.
I love that analogy. Maybe you've got some subscriptions you're not really using, or could you negotiate better rates on some of your bills like insurance or your phone bill? Every little bit helps.
Yeah, those are really great points. I actually was able to save a good amount of money by renegotiating my internet plan recently.
See, there you go. Now that extra money can go straight to your savings or investments.
Exactly.
It's all about optimizing.
Yeah, and the best part is, even if you can only find a few dollars here and there, it all adds up over time.
That's right. Remember that coffee example we talked about earlier? Skipping that daily latte and investing that $5 instead could potentially grow to over $7,500 in 30 years, thanks to compounding.
Yeah, it's really amazing how those small, consistent savings can really snowball over time.
It really is. And speaking of small savings, those micro investing apps, they can be a really great way to dip your toes into investing, even if you're only starting with a few dollars.
Yeah. How do those apps typically work?
A lot of them will let you round up your purchases to the nearest dollar and invest that spare change. So let's say you buy a coffee for $2.50. The app rounds it up to $3 and invests that extra 50 cents.
That's a clever way to invest without even thinking about it, really.
Exactly. It makes investing just a seamless part of your daily life.
That's great. And some of those apps, I think, also let you set up recurring investments, even if it's just like $5 or $10 a week.
Right. And the key is just to find an app that really aligns with your investment goals and your risk tolerance.
Yeah, good point. Because even though we're talking about starting small, it's still really important to have a plan and know where your money is going.
Absolutely. Now, another strategy for freeing up cash for investing is to boost your income.
So we're talking about side hustles, freelance gigs, things like that.
Exactly. There are so many possibilities for earning extra income these days.
Yeah, I mean, you could drive for a ride-sharing service, you could do some freelance writing or graphic design, sell crafts online, teach virtual classes. There are really like endless options out there these days.
And the beauty of a side hustle is a lot of times you can set your own hours and work at your own pace.
Right, so it's all about finding something you enjoy, something that fits into your lifestyle, and then you can channel that extra money directly into your investments.
You're essentially turning your time and skills into financial growth.
It's like giving yourself a raise and investing it all at the same time.
Now, let's talk about a strategy that can really directly link your paycheck to investments. Employer-sponsored retirement plans. Yes, like 401ks or 403bs. These can be super powerful for building long-term wealth, especially if your employer offers a matching contribution.
I've heard of those, but honestly, they always seemed a bit complicated to me.
They can be, but they're not that hard once you kind of understand the basics. A matching contribution is basically free money from your employer.
Wait, free money. Tell me more.
So a lot of companies will match a percentage of your contributions to your retirement plan. Let's say you're contributing 5% of your salary to your 401k. If your employer matches 50% of that, they're basically adding an extra 2.5% to your retirement savings.
Wow, that's incredible. So it's like getting a bonus just for saving for your future.
Exactly. And the best part is the money's automatically deducted from your paycheck before you even see it.
So it's another way to automate your savings, make it a non-negotiable part of your financial plan.
Exactly. And then in many cases, those contributions are actually made pre-tax, which means you're reducing your current tax burden as well. Oh, wow. So you're saving for retirement and potentially paying less in taxes today? That's a double win.
Exactly. So even if you're just starting with small contributions, those employer-sponsored retirement plans can be a fantastic way to put your savings on autopilot and take advantage of those really valuable employer matches.
Okay, this is all such great advice. I'm feeling much more confident about making those small savings work for me. But what if my employer doesn't offer a matching contribution? Are there any other options available?
There are definitely other options. We're going to explore those and then also talk about some additional resources and tips in the final part of our deep dive.
Sounds great. All right, we're back for the final part of our deep dive into small savings and how to make them have a big impact.
We've covered so much already.
Yeah, from building that solid financial foundation to exploring all these different ways to make your money work for you, even if you're starting small. We talked about setting up those automatic transfers, tackling high interest debt, and even diving into investing with stocks, bonds, mutual funds, and those valuable employer-sponsored retirement plans.
Yeah, and remember, even if your employer doesn't offer that matching contribution, there are still ways to really invest for your future.
Absolutely. There are definitely other options.
Okay, so what are some of those options?
Well, like you could consider opening an individual retirement account. You've probably heard of those, an IRA.
Yeah.
They're accounts specifically for retirement savings,
Okay.
and they come with some nice tax advantages.
Oh, okay. So what's the difference between a traditional IRA and a Roth IRA?
So with a traditional IRA, your contributions might be tax deductible, which could lower your tax bill today, and then the money grows tax deferred.
Hmm.
And you pay taxes on it when you withdraw it in retirement.
So like a tax break now, pay taxes later.
Exactly.
Yeah.
Now, with a Roth IRA, your contributions aren't tax deductible, but the withdrawals in retirement, they're tax-free.
Hmm. So pay taxes now and enjoy those retirement withdrawals tax-free later on.
That's right. And the best type of IRA really just depends on, your own personal circumstances and your financial goals.
Okay. Yeah, it sounds like it's worth doing some research, maybe even talking to a financial advisor.
Definitely. A financial advisor can help you kind of weigh those pros and cons and figure out what really works best for your situation.
Okay, cool. So we've got IRAs as another option for retirement savings. Are there any other investment vehicles we should know about?
Oh, definitely. We've talked about stocks, bonds, and mutual funds, but there's a whole world of alternative investments like real estate, commodities, and even cryptocurrencies.
Those sound a little, well, complicated.
They can be, which is why, again, it's important to do your research and understand the risks involved before you dive in.
Yeah, that's a good reminder. I think it's easy to get caught up in the, excitement of investing, but you have to remember that every investment comes with some level of risk.
Exactly. And it's always important to diversify your portfolio to manage that risk.
Okay, this is all incredibly helpful information, seriously. But before we wrap things up, I want to go back to those key takeaways for making small savings have a big impact. Can we recap those one more time?
Absolutely. Number one, start early and be consistent. Those small amounts really can add up.
Right. Thanks to the magic of compounding.
Yes. Number two, automate, automate, automate.
Set it and forget it.
Exactly. Make it a non-negotiable part of your routine.
Love that. What's next?
Number three, prioritize paying off high-interest debt. Those credit cards can really eat into your investment gains.
Solid advice. What's number four?
Number four, choose investments that align with your time frame and risk tolerance. You have more time to ride out those market fluctuations with longer-term goals.
That makes sense.
Yeah.
Okay, and finally, number five.
Number five, never stop learning. Personal finance is always changing. Stay curious.
Yeah, keep exploring, ask questions. There's so many resources out there, to help you on this journey.
Exactly. Like mymoney.gov and the SEC, they've got tons of free information online. We'll link to those in the show notes.
Perfect. That way, everyone can easily access them and continue their financial education. I love it.
It's been a pleasure diving into all this with you. You don't have to be an expert, to take control of your money.
I think that's such an important message. It's really just about taking small steps,
Right.
right? Building positive habits over time.
Exactly. Go out there, start investing, and build that future you deserve.
I love that. Well, thank you so much for joining us on this deep dive into making small savings have a big impact. It's been a pleasure having you.
The pleasure was all mine.